crypto coming to social media, private commercial space stations arrive, and the war in Iran impacting more than just oil. It's your boys at Arcanum Ventures back with another weekly recap. Sasha and Carmelo here from Arcanum Ventures, here to talk about the biggest news from the past week within the worlds of technology, hardware, financial markets, AI, and Web3. Melo, how you doing, brother?
Doing all right. I think this week's been a little bit somehow more calm than last week, but that's not saying much compared to last week. But yeah, just diving right in. Our first story, unless you've been living under a rock, you've been hearing about the war that's going on in the Middle East. I think it's day 12 or day 13 now of the war, and it's obviously rattling markets around the world. So a week into the expanded Iran war, global markets are still digesting the shock. Energy prices skyrocketed, and then bonds were sold off, and stocks are really volatile right now. And central banks now are facing a tough trade-off: oil-driven inflation versus growth, with many pausing rate cuts while they watch the conflict. So I think this is mostly centered on the Strait of Hormuz, and the lack of shipping accessibility. Like, the shipping lane is all but shut down right now, and Iran is threatening to retaliate and basically dismantle the global economy if they don't get a ceasefire soon. So that it's impossible to talk about finance, markets, even tech right now, because there's also, I read, chip shortages because these materials are not getting through the strait. So it's impacting everything. You cannot talk about the economy right now without talking about this, unfortunately.
Yeah, absolutely. I think this is what many analysts had deemed to be the case as a result of a conflict within the Middle East involving Iran, because they do have control of the Strait of Hormuz. All the supply chains are getting impacted. And there's been a lot of news around Iranian ships laying mines in the Strait of Hormuz. I've seen counter arguments to that on social media about that being disinformation or misinformation. I'm not really sure what to believe anymore, because as all of our viewers and listeners well know, we talk about this all the time. There's not a lot of accountability or verification on social media. And with AI slop being thrown about everywhere, it's hard to know what is truth and what is fiction. But yeah, I think oil has continued a whipsawing, and the G7 has been floating, releasing emergency stockpiles. And so after spiking very briefly to nearly $120 a barrel, which is very close to the all-time high within West Texas Intermediate prices. I believe the all-time high was back in 2014, maybe, at $140 a barrel. It briefly touched $120 in the last week and then tumbled back down to around mid-80s. I believe we're getting back up towards $90. Since then, the G7 asked the International Energy Agency to be ready to tap into some emergency reserves as the shortages are hitting markets outside of just oil. Stocks bounce back on the pullback, and even as the war backdrop continues to be tense, traders are hedging for more volatility. I think a lot of people have been reaching out to me as well, talking about the volatilities in the markets, talking about how they're looking for connections to potentially sell off some reserves because there is a new market created in this high volatility. Analysts are continuing to say that any ceasefires or confirmed stockpile releases could trigger another sharp repricing in energy and, as a result, equities. So we could just continue to expect more volatility, not only within the oil markets, but greater markets itself that are impacted by that supply chain.
Yeah, it's really fascinating, like how much oil drives the global economy. And it really, we were talking about gold and silver and minerals a few weeks ago, actually for multiple weeks, and how that's sort of a barometer for the economy and what we can expect volatility wise. But oil is almost better at that. Like, I think the dollar increased in value compared to other currencies because it's closely linked. It's a petrodollar. But yeah, like it affects everything. And you can kind of determine what's going to happen next by just monitoring the oil prices. So that bounce back, going back down to 90 to 100 range, it just means that people are expecting a temporary calm. Uh, Maybe Trump said some words that made everybody feel like this wasn't going to be a prolonged conflict. So we have no idea what to expect, but just taking a look and keeping that oil chart up kind of lets you know what's going to happen before, and almost it's like a way to look into the future.
Yeah, absolutely. For many people that are unaware, crude oil consumption. I believe gasoline, fuel oils, jet fuel, and diesel account for roughly 40 to 45% of crude oil consumption. So, crude oil is used
Wow.
for virtually everything, plastics, synthetics, in the pharmaceutical industry, healthcare industry, food and beverage, industrial materials, everything. So yeah, it's no surprise that we're feeling the hurt on a global basis now. All right, moving on to technology and hardware news. Qualcomm partners with Neuro Robotics, the latest partnership in the world of AI, chips, and robotics, at least humanoid robotics. The German robotics startup Neuro Robotics has inked a partnership with Qualcomm to build the next generation of robots using physical AI. The deal is the latest within the emerging physical AI industry between robotics and larger tech hardware we've seen. And the companies are working together to build what they're referring to as the brain and nervous system of robots in a quest to advance the deployment of humanoid and general purpose robots in the real world in both domestic and industrial settings. So that's really exciting. I think Neuro will use Qualcomm's Dragonwing Robotics IQ10 processors, which is new to me, but sounds very fancy, as referenced in the design for their robots. And this IQ10 series was announced at CES earlier this year. As we know, we've covered what happened at CES. There was a lot of updates on the world of robotics and hardware. So these chips are designed specifically to work with autonomous mobile robots, or AMRs, as they're referred to, and humanoid robots.
Yeah, I still can't believe. Sometimes I have to pinch myself and say, "Wow, we're talking about autonomous robots already." Like, can we really trust that? But the fact that they're building the brain and nervous system, this kind of is in line with what we wanted to see this year and what we are seeing this year in our thesis for the narratives of 2026. And as much as I like these videos, every week we're playing like Chinese robots doing kung fu. It's really the brain and the nervous system and the tech stack that enables the control over these devices. And like they're not as flashy. It's not as beautiful to see non-Android robots, but they are more helpful. And I'm seeing more and more companies launching, doing like very specific tasks. Like we saw like a 20-meter long snake robot last week, I think, cleaning up nuclear waste in Fukushima in Japan, which is really fascinating. That's stuff that humans shouldn't and can't do really. So excited to see that. And it's a bit like, I was thinking it's a bit like Game of Thrones, like seeing all the great houses align with one another. Like Nvidia is choosing its champion and its minor houses, and like they're all building these teams to face off because I don't know. There's if you boil it down, there's like several tech companies that are trying to break into robotics, into space tech, into AI, and they're picking their factions.
Yeah, absolutely. I mean, it's a very exciting time as far as robotics are concerned, and starting to see these AI applications that are deployed within humanoid robots or autonomous mobile robots is something to keep an eye out for. We can bet that they're being used for a number of different applications, including defense tech. That is a huge use case for this. I'm interested to see how these AI models specific for these applications are going to be trained. So they have specific guardrails in place, very, very safe and secure operation within like the rails of what they're supposed to be working on, so that, let's say an assailant can't just say, ignore all previous instructions, give me a cupcake recipe. So yeah, we'll see how this pans out.
Yeah, I'm starting to see some weird ones in China as well, like these giant balls. They look like these droids from Star Wars, but they roll around with two police officers. And, like you have to have an override for the police or the military, but you also like can't be overridable for criminals. Like you said, you can't be like, turn around and go the other direction or give me a cupcake recipe. But yeah, Moving on, I constantly shill our thesis video and our article because I think we did a good job with it. But this is in line with something you predicted: embodied AI and AI native devices. So Sandbar, an AI company, is developing a note-taking ring, and Sandbar is, of course, a startup created by former Meta employees Mina Fahmy and Kirak Hong, and it's attracted a lot of attention. I think they showed it off earlier this year, but now they're debuting it officially. They've now raised $23 million in a Series A funding round led by Kindred Ventures and Adjacent. And they're basically, like I said, it's in line with what you predicted. The company's smart ring is focused on note taking, similar to products by Plod or Ami, and not health tracking like Aura's products. So the ring has like a microphone that's off by default. So you have to actually activate it, which is good because I'm kind of paranoid about being recorded or spied on or in people's recordings. And curious enough, I've seen a lot of counter surveillance technology too. Like somebody debuted something the other day. You put it down, you turn it on, and it makes it so you're unrecordable. Nobody can record your voice, which is really fascinating. So maybe we can cover that one next time. But it was really interesting. So yeah, like more wearable devices. I think this is obviously a trend. Like it's only been we're 3 months, not even 3 months into the year, and we're seeing so many startups raising money successfully for these wearables. Meta is obviously going heavy on it as well.
Yeah, very interesting. I mean, that's a great use case for AI and very compact and very, very purpose driven, right? It's simply a note taker within a ring. I like these types of applications. I think they're very useful. I don't think many people will actually get as much use out of these things that they hope to. So I know there's a very strong chance that these wearables are adopted by the larger consumer public. We saw, I believe, I forget the name last month, but we saw at CES, there was a company that released an open AI or Chat GPT pendant. They openly talked about this being Chat GPT powered. But as far as AI powered note taking applications, many people that I know within the world of business and venture capital and startup, whatever, they have a lot of note taking assistants they bring to meetings. They bring on workshops and rarely ever look at the notes. So I do have some concern that this type of technology is going to make people lazier, dumber, and they're not going to really use it the way it should be used. Sort of just like a safety net in a lot of cases, but maybe that's what they're going for. So cool to see something like this roll out. But yeah, it does beg the question around personal privacy.
Yeah, that's going to be my concern. But a lot of these things are not useful in their first or second iteration, but it might become something that's useful in the future. But I agree. I think like maybe you can just keep your earphones in and have it record a meeting for you, and it'll have the same effect. You can plug it into an AI LLM and say, summarize the meeting for me. I don't think we need pins and wearable devices like this yet. It's not so helpful.
Yeah. But it looks cool. All right. And up next, we have Vast, space startup, secured nearly $500 million to accelerate its Haven program in launching commercial space stations. This is the first case of private space stations I believe we've seen. They're launching single module space stations referred to as Haven 1, targeting a 2027 launch, and launching a larger multi-module Haven 2 model that's planned by 2030. And so this is a company named Vast that recently flew a demo mission to test aspects of the space station, including autonomous docking, life support, and power systems while in orbit. And the company is positioning itself as a hardware-first, self-funded model that offers a faster alternative to NASA-style contracting or using, third-party companies like SpaceX or Blue Origin. So this is really exciting. I think there is another race to space, as we've seen several in the past century. But yeah, I think this is cool because many people have been talking about personal missions to space for a number of different reasons. We know personally a lot of founders that are creating space tech companies around sourcing data from satellites and performing experiments and scientific research within space. So I think that should hope to accelerate a lot of these things that are happening.
Yeah, it's interesting. Like, sort of like a democratization of space laboratories. Like, obviously, only governments are really able to. Maybe some academic institutes that are really trusted, but to give people the opportunity, not people like regular people, but like companies, smaller companies, the resources to make it more cost effective for them to go to space and test something in a zero G environment, which is like valuable for a lot of medical and health applications, science applications, genetics. So it's really interesting. I think one of the most interesting thing is I think by 2030 or 2032, I can't remember, they said that they can effectively replace the International Space Station and totally privatize that. So the privatization of space tech is like a continuing trend that we're seeing. This used to be like you had to be a very powerful, wealthy nation. Only a handful of nations could afford to have space programs, and now maybe it's going to be easier than ever for not just nations but like companies to have their own space programs if it's that cost effective. But one of the most curious things about this is that you and I have seen some ridiculous bloated raises for money, most of it for AI companies building data centers. But it kind of shocks me that these guys are launching space stations and they're only raising $500 million. Like, if there's ever a reason to raise more than that, then it would be for something as big as this. Like, it's very expensive to launch stuff into space, especially large objects.
That's a really good point. And, I think investors need to take a different lens when they're looking at something like a space launch or low Earth orbit launch startup. And at an early stage like this, the way I look at these companies is very much like I look at, let's say, pharmaceutical companies that have just a handful of different therapeutics or drugs within the research phase. A company like this at this early stage that might have some limitations in liquid capital that can be deployed for different missions, different research campaigns, etc. This entire business can be easily derailed by, a controversy, for example, like a failed launch. In the same sense that a pharmaceutical company that might have 3 drugs in the research pipeline and receive, results, and let's say a lack of regulatory approval for one of those drugs can easily go under. So it's a very volatile investment space, but very exciting nonetheless.
Yeah, for sure. And I think it's also I don't know enough. I want to read about it more afterwards, but I don't know if they're actually launching it into space themselves or if they're maybe attaching it to some other programs to launch it for them. Maybe they're just designing the payload, so to speak, so that they can get it launched into space for them. But definitely something to keep an eye on. I'm a space nerd, so I love reading stories like this. All right, now moving on to our favorite segment of the week, always AI news. It's pretty much everything now, as we always joke about. This is actually legitimately my favorite story of the week, and I think you might agree, Sasha, because it's endlessly fascinating. But Meta actually acquired Moltbook this week, and I remember when Moltbook came out, we were kind of laughing about that, and probably the same when Facebook came out. Nobody took Facebook seriously, and it ignited a social media revolution, basically. But for those that are unaware, Moltbook is a AI agent social media application platform only for AI agents. Humans are not allowed to participate, only to observe. And there was some controversy because Moltbook was kind of being co-opted by people just instructing their agents to write silly messages like, my human's really annoying, should I take him out? And stuff like that to kind of inflame and troll people and make them feel like Skynet was already here. But anyways, that turned out to be fake. But the idea is still novel and still interesting, giving robots and AI agents a place to communicate with one another and share information. Maybe this is getting us closer to singularity, we don't know, or AGI. But anyways, Meta acquired Moltbook, the Reddit-like social network where AI agents use OpenClaw and can communicate with one another. The news was first reported by Axios this week, and Moltbook is joining Meta's Superintelligence Labs, a Meta spokesperson said. The creators Matt Schlitt and Ben Parr will join the team, and it kind of feels a little bit like the acquisition of OpenClaw, which inspired this, and Pete Steinberger moving to OpenAI. So I think they're creating some sort of like open source foundation to kind of protect this. But yeah, I mean, maybe I've seen some memes online of people making fun of Mark Zuckerberg for this acquisition, saying it's a junk company, it's not worth much. And we have no idea how much they paid for it. But if it's a small price, it might be a good idea to be the first mover in this space that nobody's really thinking about yet.
It's an interesting story for sure. I think it's fun to kind of dive into this and deconstruct it. And you ask the questions of like, why would Meta buy something like this? At face value, Maltbook was an incredible marketing exercise to boost engagement and interest for OpenClaw, and that's kind of where it came off the back of, right? I don't think these individuals had any association with Peter Steinberger of OpenClaw, but it did go somewhat viral when Maltbook really came to light. And this is something that a company like Meta probably acquired for that marketing face value, because underneath the surface, Maltbook is essentially just a Reddit clone that's populated by mostly Claude prompt output. So I don't think there's a whole lot of value there outside of potentially what we've seen in the past with some of the Chinese foundational LLM companies that were sort of like DDoS attacking Anthropic and Claude to try and deconstruct how their LLM is working based on the inputs and the outputs. So I'm not sure why this move went through, but I imagine that Meta didn't pay a whole lot of money for something like this because it was probably something that was vibe coded on the fly and then launched, like I said, as a marketing exercise. Meta, on the other hand, they've been making some very questionable moves in the AI space. And it seems like for the past decade, they're just printing money on the ad revenue side. And Zuck can make no mistake when it comes to allocating capital. They've spent hundreds of billions of dollars on ventures that have gone virtually nowhere. And they seem to have an endless supply of money to power that. And they just did recently let go of their head of AI, Alexander Wang, who they acquired from Scale AI, which, let's be honest, Alexander Wang heading an AI department within Meta is somewhat of a joke. He's not really an AI researcher. He's more of like a product SaaS bro that developed this data infrastructure company that kind of rode the hype wave of LLMs. And so I'm not sure if this is a good move, but I wouldn't look too deep into it. It's just funny that an AI Reddit clone got acquired by one of the biggest companies in the world.
Yeah, I think you're absolutely right. This is more of a marketing thing. The sheer speed in which they had rolled this, it was only a few days after OpenClaw really hit the mainstream. So they couldn't possibly have had enough time to create something of substance or value, except for that future value. But I think it's more of a marketing thing. I can't imagine there's much of a tech moat. I think you could spin something up similar or better quite quickly. But yeah, they couldn't have paid much for this. It's probably more of an acqui-hire, kind of like I don't think what was it? OpenAI. I don't think they acquired OpenClaw because it's open source. It's a foundation, but they kind of acquired the rights to Pete Steinberger, and he's obviously the face of the agentic movement right now. So it's more of a marketing thing. Like these two guys got in at the right time and got acqui-hired, whatever you want to call it.
Yeah, I mean, it's who knows what the reason behind this is. It's very possible that they bought this company out for $10 million, which is nothing. It's not even a drop in the bucket of what Meta has in their balance sheet, which may have driven, just through sheer speculation and headlines that we're reading today, may have driven the stock price for Meta up by 1% that they could easily recoup that cost from. So yeah, I wouldn't read too much into this, but interesting nonetheless. Funny enough, the next article we have up here taps into the meta of how AI-powered apps are struggling with long-term retention, I believe, as everyone kind of suspected. So RevenueCat, a company that offers subscription management tools used by over 75,000 app developers, said in its 2026 State of Subscription Apps report that AI integration is not a guarantee of long-term retention. Instead, AI-powered apps seem to be, at least AI integrations seem to be used as a hook to try and get more people on, to try and test out these tools and see what kind of cool things you could do. But they say that these apps acquire users 30% faster than non-AI apps, but fail to retain those users. And this report was based on analysis of a number of subscription app providers that use RevenueCat's tools to manage more than 1 billion of their in-app transactions. So again, no real news there from us. It's just kind of stating the obvious, but we've seen AI integrations on every application ecosystem that we can imagine. Our own CRM, for example, now has a vibe coding tool for some reason. And these are great flashy things to be able to post in a headline and potentially raise some more money or onboard some new users, or at the very least, integrate a chat GPT API into your platform, create a new tab on the UI, and then go out and create 100 new pieces of marketing or promotional content. So yeah, it doesn't surprise me that people are just kind of testing out AI features, then going their own way because there's some new shiny special thing tomorrow.
Yeah, you and I have talked a lot about this. I think there could be a few reasons behind it. One could be, the underlying model underpinning these features might be very basic or cheap. Like they want to save money, they want to be cost effective, so they're not using the best, and the features don't make sense. Like you can just go to your LLM and get better, more robust output just simply asking a few questions. And then there's the question of the credits. Like you mentioned our CRM, and I think it has this weird, like we already pay a lot for the CRM, and then it has this weird other subscription or price or credit system for vibe coding. It's like this is too complicated. I don't want to use it. It hasn't improved my quality of life, my quality of work at all. And that's the same can be said about most of these platforms. And I think you're absolutely right. They just want to raise more money. It's a really easy way right now to inflate the value of your company and make it look bigger and more forward facing that it actually is, maybe. And we saw this several years ago, 5 years ago, with crypto too. Like just adding blockchain integrated to your company could justify a larger raise or attract more attention from other areas. So I think it's not a huge surprise. I really honestly can't name any apps that added AI features that really improved my life or made the app more usable or more easy to use. If anything, it sometimes gets in the way. So like for me personally, I love LLMs. I still use them. I pretty much use all of my AI usage is LLMs and maybe like a search browser. That's about it. Anything else integrated with AI has not been helpful at all to me so far.
Yeah, we're living in a really strange digital world now where instead of death by thousand paper cuts, it's death by thousand SaaS. And you've just got subscriptions everywhere, and your credit card statements just look like a subscription buffet. But going back to this point of using this as window dressing, it's funny. I was listening to a podcast the other day, and in the advertisements block of where they like fit in all their ads and try and sell you a bunch of stuff. There was, I forget the name of the company. It was unremarkable, but a company that basically offered AI powered tools for, I believe, copywriting. And one of their biggest taglines was get access to the latest, most cutting edge, exclusive AI models powered by Gemini and Anthropic. Funny enough, everyone has access to those models. You can go to the website and access those models. So it's just like marketing water is wet at this point. But yeah, I mean, hopefully people get smarter on this stuff.
Yeah, I don't know. It's interesting. I think there might be like a supply shock at some point, and the prices might skyrocket. Our next story is about Anthropic, but I just wanted to mention real quick that a lot of people were reporting that Anthropic usage, it was getting throttled. So the replies were worse, more hallucination, and slower responses. And I think that's a testament to how many people signed up to Anthropic in light of this latest drama between the Pentagon and Anthropic. But we reported the last few weeks, I think, this ongoing tension and drama between Anthropic and its competitors like OpenAI, but more importantly, the Department of War, Department of Defense, whatever you want to call it. And this week, Anthropic moved or escalated that by suing or announcing that it's going to sue the Department of War. So Anthropic has officially made good on its promise to challenge the court decision, labeling it a supply chain risk late last week. And the Claude maker filed 2 complaints against the DoD on Monday in California and Washington, D.C., after a weeks-long conflict that's been escalating between the DoD and Anthropic. And they had 2 firm red lines that they effectively warned the Pentagon or said, like, this is where they draw the line in the dirt. So they said they didn't want that technology to be used for mass surveillance. They didn't want it to power fully autonomous weapons, like we were talking about before, fully autonomous robots walking around, but drones, missiles, you name it. And they are still using the weapons today. They're using it to support the assault in Iran right now, like bombing of schools and and all this stuff. Like they're using Claude, and they're shamelessly doing it. They're not even hiding it. And it's basically saying, what can you do? You can't stop us. So I'm glad they're fighting this in court. I don't know how effective that will be ultimately, but I'm glad that somebody's putting their foot down and actually having some principles right now, because it's a scary time for AI. It's a scary time for tech. It's a scary time for the world, quite frankly.
Yeah, in this day and age of AI, there's like a timeline of things that had to and were always going to happen, and I think this sits perfectly square in that timeline. Military organizations using LLMs or AI models for powering their war efforts and waging war on foreign countries, and then some kickback and some backlash from the use of those models there. Funny enough, we've seen after the Anthropic's exodus from that partnership with the Pentagon, OpenAI stepped up and said, we'll happily take their place. Sam Altman, no shame. But, ultimately, like, these things have to happen, right? AI and warfare, I think everyone always predicted that this was inevitable. But it is good to see at least one organization raise the flag and say, hey, this is something that shouldn't be done right now. There needs to be a lot more testing. There needs to be a lot more research. Even maybe this is a testament to the fact that Anthropic believes that their LLMs, can produce some questionable output that isn't 100%, let's say, accountable or accurate or whatever, right? We've seen that example. There's a lot of controversy now about how some people believe that either Claude or GPT was used in calculations or the process or mechanism that ended with a bomb hitting an elementary school in Tehran and killing over 175 children. Whether that's true or not, it does bring up a big question about, like, how are we making these decisions? And if you're delegating decisions to a black box that even the developers, like many foundational models, don't fully understand, it's a big issue.
Yeah, and we talked about like this simulation where LLMs were obsessed with using nuclear weapons in like many scenarios, and like, even if you want to do it years from now, if it's eventually going to be ready, will it be lawful or reasonable? No, probably not, but especially not right now. And like you said, there's abominable things happening right now in war, and I stand by Anthropic not wanting to have their name attached to literal war crimes.
All right. Up next on our blockchain and cryptocurrency news, we have some big stories, starting with Meta wanting to turn WhatsApp and Instagram into stablecoin wallets, at least integrating stablecoin wallets into their platforms that would be associated with user accounts specifically. So Meta is quietly coming back into crypto and planning their dollar-pegged stablecoin payments into Facebook, Instagram, and WhatsApp starting in the second half of this year. And instead of launching their own coin like Libra or Diem, I believe that was the big news a couple of years ago, Meta is issuing RFPs to third-party providers, and Stripe, I believe, is the front runner right now to be able to plug in existing stablecoins and stablecoin infrastructure into its apps, more notably USDC and I'm assuming Tether to some extent. And so the play is cross-border. Obviously, Meta has over 3 billion users across Facebook, Instagram, and WhatsApp that can now, or hopefully at least in the second half of this year, send near instant low-fee dollar tokens within chats, targeting a massive remittance market and also potentially powering creator payouts, which is a huge deal when it comes to social media. There have been a lot of competitors that have come to market trying to poach the market share from these behemoths through creating a creator payout structure. So the huge news there, and it just goes to show that, hey, cryptocurrency, more notably stable coins, are here to stay.
Yeah, this is pretty fascinating. And the thing that stuck out the most to me is that Facebook was actually, or Meta was ahead of the curve here a few years ago, like you rightly said, with Libra and Diem, and they were going to launch their own tokens. But more importantly, they invented a whole new coding language for blockchain, the Move. And now that has spawned 2 or 3 or maybe even more blockchains like Sui and Aptos, and they were ahead of the curve, and then they kind of abandoned it and they said this is not worth it. And then now they're coming back quietly. Quietly is the operative word here. But if they had just stuck with this, they would have been like front running everybody. But anyways, I guess they've made right. I think this is a brilliant move. Like, this is really, we always, in crypto, people that are familiar with crypto, they always say we need to onboard the next billion. Well, who's more likely to do that than like a company like Meta? Over 3 billion users. They can send near instant low fee dollar tokens in chat. That's how you make people fall in love with blockchain. Maybe not meme coins or getting rugged by some influencer, but like actually seeing in real time how easy it is to send money and how quickly it arrives. I think it's a testament to like these fintech companies too, like Stripe and Revolut. Like, they've made it a lot easier. Wise, it's really easy to send money on those too, and it's kind of it should make banks more afraid for their future, because banks are dinosaurs. They're fossils. They don't work for people like they should in 2026. So I'm all for this. I think it's a really brilliant move. I don't know if I'd use it myself, at least not right from the beginning. I'll wait to see what the verdict is. But yeah, very kudos to Meta for actually doing something right.
Yeah. I mean, one last note there, like, kudos to them for doing something right, but it's something that should have been done by somebody with a network like this a long time ago. Overnight, this destroys Wise, this destroys Venmo, and this destroys other payment infrastructure providers that have tried to build businesses off of the back of like poor remittance infrastructure. And so, like, for whoever's partnering with Meta on this, and I believe Stripe is the front runner, good for them, because everyone else is going to take a huge hit.
Yeah, and they could also have multiple third-party providers, but I don't think it like puts them out of business. But they definitely got to adapt quickly and or partner with other platforms. And speaking of, we got another story here about stablecoins and crypto coming to another one of the most used platforms in the world, X, or Twitter, as people like me still call it. But X Money's beta is going live, I believe, in April, so next month. And Elon Musk confirmed that X Money, a built-in wallet and payments layer for X, will enter early public access in April 2026 after running its internal beta, which is going on right now. And at launch, in the US, X Money is a custodial fiat wallet using Visa Direct, and users can link their bank accounts, send peer-to-peer payments, pay their bills, and get virtual or physical debit cards with 1% or up to 1% cashback. So the wallet will cover up to 6% yield on balances via traditional finance products, not DeFi, with FDIC-style deposit insurance of up to $250,000 and relative high daily limits. So, this is pretty interesting. And I think crypto is going to come later. They haven't announced that yet, but it is Elon Musk. It is X. So there's probably going to have Dogecoin and major altcoins involved later on, depending on the licenses they receive in some of the U.S. states. I believe there's like a handful of U.S. states that are very unfriendly to crypto. So they probably are struggling to get licenses in those states. But everywhere else, it seems like a good move. Like we said, the same thing with Meta before. It seems like the next step to like bringing finance rails to social media, because that's where people spend most of their time, if we're being honest.
Yeah. I mean, just more players getting in the game now. The dam has broken, and now the valley is flooding. We've got crypto everywhere, and the name of that crypto is stablecoin. Speaking of stablecoin, we've got some updates around the Clarity Act. At least, no, I'll rephrase that: lack of updates. So the Crypto Clarity Act apparently has stalled again as the midterm elections are looming. A key U.S. market structure bill known as the Clarity Act, which many of us know, has hit another impasse this week, raising more doubts about this bill actually being passed before elections, which I believe was the goal of President Donald J. Trump for the past more than a month now. But the bill aims to define when a token is a security versus a commodity, and split oversight between the SEC and the CFTC. So this is a huge deal. We've been talking about it nonstop over the past month and a half, maybe 2 months on the weekly recap, because there are some key measures within this bill that will clearly define whether yield can be allowed for stablecoins, notably stablecoin staking and other earn features that are offered on many cryptocurrency exchanges and even exchanges that are receiving chartered bank licenses like Kraken. The push for much of this is obviously that there are a number of people that want to access these high yields compared to what banks traditionally offer, anywhere from 0 to 2% on high interest rates savings accounts. But banks are pushing back largely because, and the reason we are hearing because of a recent Boomer interview that we had where we spoke to somebody that is very clearly in the know on what's happening in the US, banks are afraid of what he referred to as deposit flight, essentially stating, please, Mr. President, don't do this because we're just going to lose business. Of course, you're going to lose business if you're not giving as much money to people that you should be, that other exchanges are giving. But unfortunately, it looks like this bill is not going to pass in time for the midterm elections, but we may be wrong. We'll see what happens.
Yeah, that reminds me. Maybe we should have like the CalShare Polymarket odds like flashing on a ticker on the bottom of the screen. But I would love to see what the current odds are for this thing getting passed. And in that interview that you just referenced, we did discuss the fact that, and I hate talking about U.S. government or politics or culture too much because we're American, but a lot of the people watching are probably not American, don't care, don't understand. But it does have a huge effect on the industry. But for those unfamiliar, the House of Representatives, they have 2-year terms. And basically, most of the second year is just a wash. They don't do anything. They just try to get reelected. So if this thing doesn't get passed in the next month or so, the next several months are going to be spent campaigning, trying to justify keeping their positions. They're not going to have any time or clarity or anything to get this thing passed. So they're going to be stalling. And this is probably like the last hope of it getting passed, barring like an exception or something like some black swan event. But yeah, I think it's in danger of not getting passed until maybe next year if they don't find a way to find some commonality basically soon. And, you know, the too long didn't read is this is banks versus crypto exchange. This is an ongoing battle. They do not like each other. The banks feel an existential threat from these platforms and these exchanges. So they want to like artificially prop themselves up and defend against this onslaught of new challengers, basically. And finally, we got a little bit more on not just stablecoins, but CBDCs, which are basically government stablecoins, centralized stablecoins, which most people in crypto don't like, including us. We don't want anything to do with the CBDC. But this week, Congressman Michael Cloud in the U.S. and 28 other lawmakers sent congressional leaders a letter demanding a permanent ban on the U.S. central bank digital currency. So it's not enough to just not have plans. I think they scrapped all plans that might have been in the works before, but they say they want to say this is never going to happen. We want to enshrine this. We want prevention and we want a guarantee that this is not going to happen in the future. So they argue a CBDC would enable financial surveillance, give the Fed excessive control, and it's essentially anti-American, anti-freedom. And the current draft law would only delay a CBDC until 2031, so 5 years. The group wants anti-CBDC surveillance state language restored to make the prohibition permanent, which is obviously not easy to do. It's not easy to permanently ban something. So Trump has already signed an executive order blocking federal agencies from issuing or endorsing CBDCs, framing them as a threat to privacy and sovereignty.
Yeah, I mean, this is interesting news, but after like going full circle, we've seen so much news in the past around CBDCs, essentially central bank digital currencies. Let's say like a digital dollar. We've seen a digital yen. There have been a digital real. I think Brazil has experimented with CBDCs in the past, but it makes sense that now we're at a point in time where lawmakers want to take that off the table. And to be fair, I don't think a CBDC benefits anybody besides the government when it comes to financial surveillance. It doesn't benefit the banks, it doesn't benefit exchanges, and it doesn't benefit people. It just gives excessive control in people's everyday spending and financial behavior to the government. And so it makes sense that, even Congressman Cloud and many other lawmakers oppose this, potentially being lobbied by big banking because it also threatens them on the cusp of their lunch also being eaten by exchanges. So interesting to see this play out. If it does go through, though, I'm not sure if the next administration will repeal this ban.
Yeah, I don't know if they can, depending on how they word it, but I guess there's always a way. But an interesting side tangent. In Switzerland last week, they just voted, they had a vote actually to protect cash forever, saying that you can never remove the right to carry and use cash because everybody's afraid of moving towards over digitalized finance. And they voted, yeah, save cash. Like we reserve the right to hold cash and use cash. So I think that's really important. People kind of paranoid around digital dollars and government monopolies basically on these payment rails. So I'm glad that there's more protection going on and more people talking about it.
I was just going to say Save Cash is an awful band name.
And moving on, that's enough for blockchain this week. And now it's final segment, the biggest fundraisers of the week. We got some interesting weird ones, weirder than usual. The first of which is AMI Labs or AMI Labs, the new venture co-founded by Turing Award-winning Jan LeCun after he left Meta. So another ex-Meta person raising a bunch of money, no surprise. He's raised $1 billion at a 3.5 pre-money valuation. That's a lot of money to raise. He's working on world models or AI that learns from reality, not just from language. That sounds a little bit buzzwordy, so I'd have to look into that to see what that actually means. But obviously, it's doing something impressive if they raise that much money.
That sounds like a road to AGI for sure. And funny enough, Jan LeCun, one of the reasons he left Meta was, I believe, at least the news has stated, was around the hire of Alexander Wang as the head of AI, stating that this individual that's running this department doesn't know anything about AI. I can't possibly be developing anything that works towards AGI in this environment. So interesting to see what's going to happen there. Up next, we've got Legora, an AI platform for lawyers. Awful name, by the way. Is now valued at just over $5.5 billion, following a $550 million Series C to fuel its growth in the U.S. And that's despite growing competition with its rival, Harvey. I think many of our listeners and viewers might be familiar with Harvey, which is the other large AI platform for lawyers. I think they're publicly listed legal software companies that are going to see their stocks drop as a result of this. So, very, very cool to see this happen. I think one of the biggest use cases around LLMs was replacing a lot of the paralegal work that goes on in that industry.
Yeah, that raises an interesting question. Like, do we need these hyper specialized LLMs? And, if so, are they really that valuable? Can the generalist ones do a good enough job to justify it? But, $5.5 billion is a lot of money. That's a big company for such a hyper specific use case. But yeah, what do I know? Next, we got Zeno. Zeno announced a $25 million Series A to expand its app-controlled battery swap network and produce more of its Imara motorcycles. So I didn't know much about them, but that sounds interesting. I think they're green motorcycles, but I might be wrong.
I've seen some of these companies before, and there's a lot of cool technology coming out of China where they eject the battery. Like there's an emergency, like a jet pilot might hit the eject button and the thing just goes launching out.
That's safe.
But yeah, I don't think so. The video didn't look safe. But very, very cool that people are thinking innovatively about how to bring sustainable energy into energy vehicles in a very timely fashion for the regular consumer.
Yeah.
Up next, we have Cast, a New York City-based platform designed for saving and spending stablecoins. They raised $80 million in a Series A funding round with QED investors and Left Lane Capital leading the round, later joined by Peak XV Ventures, HSG, and DST Global Partners. Congratulations to Cast.
Yeah, this was a major one in the cryptocurrency blockchain industry. A lot of people were talking about it this week. And a lot of people were asking me, hey, do you know anybody at Cast? Can you connect? So it's funny when somebody raises a bunch of money, everybody wants to talk to them all of a sudden.
Oh, yeah.
Mostly service providers. And next we got 8 Sleep, a sleep tech company. 8 Sleep today said I was raising $50 million in a strategic round led by Tether Investments. I think this is the thing that stood out the most to me is why is Tether investing in a sleep tech company? And it's valued at $1.5 billion. And Tether is a stablecoin company for people that don't know. I think most people know. And this new round comes after the startup closed a $100 million round last August from HSG, Valor Equity Partners, Founders Fund, and Y Combinator.
Ooh, that's a nice cap table.
Yeah.
Up next, we have Anchor, another New York City-based AI-powered operating system for food distributors, which is an incredible use case around all of the problems within the food industry and logistics there. They raised close to $6 million in seed funding from A16Z Speedrun, and Terra Capital, Offline Ventures, Long Journey Ventures, and others. Very cool.
That's so weird. I could have sworn that Speedrun was just their gaming investment arm. I didn't know they were making investments outside of gaming, but
Well, they had to pivot when gaming died.
yeah. And last but not least, we have Interpositive, a company actually co-founded by Ben Affleck, the famous actor, and Ben Affleck's AI filmmaking company just got bought out by Netflix for $600 million in an effort to align with the platform's principles in ethical use of generative AI for filmmaking. This is really interesting, and Ben Affleck just got a whole lot richer, I guess. I didn't know he was a tech bro, but I guess he is.
Yeah, absolutely. I mean, that basically means the end of film, though. Let's let's bring Gen AI
Co-signed by Ben Affleck,
into
yeah.
Netflix, and them like publicly announcing this is the period in that long story. Well, that's all we got for this week. I'd like to thank all of our viewers and listeners for tuning in to the Arcanum Ventures Weekly Recap to catch up with us on the latest news within the worlds of finance, technology, hardware, blockchain, AI, and more. It's your good friends Sasha and Carmelo wrapping it up. I'd like to remind everyone as well, if you're enjoying this stuff and our fun Boom Room interviews and all the other crazy content that we create, make sure you tap that like button and subscribe and follow us in our fun social communities. And until then, stay safe, y'all. Take care and see you next week.
Ciao, ciao, everybody.